Welcome to Money Moves, where we make your money work for you, and it's brought to you by 27/4 Investment Managers. Tonight, we have an expert on investments who's talking to us about the different types of investment products and the risks and benefits that are attached to each of them. My guest this evening is Pieter van der Gryp of Pioneer Wealth Managers. Pieter, pleasure to be with you.
The same.
Okay, it's great to talk about investments. Firstly, let's just make sure we are on the same page. Investments, what do we mean by that?
Term in a nutshell, it's forced savings. For example, you want to invest in a holiday in 2 years' time to take the family. So I need to force you to save for that holiday, and I need to do that in a proper manner.
Yes.
And I have to utilize all kinds of different investment instruments like shares, bonds, money market to meet that.
And that would be the definition of investment. And there are different types of products, I suppose.
There's a variety of products.
Yeah.
You get your tax-free savings account, your unit trusts, your endowments, your retirement annuities, linked living annuities. It goes on. The list is long.
And the type of person who would prefer investments in terms of the equities and those types of things, as opposed to, let's say, somebody who's not investing at all, or who says, I can only put my money in the bank. What sort of personality profile are we talking about here?
Tim, it's very important, the risk profile for each investor. Like you said, some are conservative and would rather like their money in the bank. They don't enjoy the volatility of the stock exchange. Others are more, they appreciate the risk. They enjoy it. So we put them in equities. So a risk profile on each and every individual is it's key.
And of course, that's the profile side, but there's also a strategy, right, to each of them?
To each of them, yes.
Okay, let's say you are conservative in your approach. What sort of strategies would you implement or pursue in that regard?
If you're very conservative, we would look at a money market that's very stable and generates income for you. We will add that to a balance fund that has a combination of a little bit of shares, a little bit of bonds, just to enhance that product a little further, because we need to beat inflation as well. It doesn't help you put your money under a mattress and a year later inflation destroyed it.
Yes.
So yeah.
And then if you are not risk averse, you are open to that, of course, hoping for better returns. What is the strategy there?
You get rewarded for taking risk. So the strategy would be to go into equities, locally and offshore. Most definitely, yeah.
Okay, and then let's look at the general risks attached to investments and go by each type. Tell me.
Your money market and your bonds are mostly conservative. When we put a combination of money market and bonds, it becomes kind of moderate. Bonds together with a mix of equity becomes moderate. And your totally aggressive is equities and derivative instruments.
Okay, so that's basically the story there.
That's basically the story.
But then there's the issue of where do you start, how do you start, by how much?
500 Rand a month. Put that away into a unit trust.
Yeah.
Depending on your risk profile, the financial advisor will go through that with you, and they'll determine which strategy you need to follow.
You know, but 500 sounds like a very modest amount. You know, when you try to project into the future, you think, I'm not going to make money out of 500 a month.
You start with 500 and you escalate it per year,
yes,
in line with inflation.
Yes.
Because your concern is you want to protect your capital. So the advisor will highlight that to you.
Yeah, but I mean, just as a practical example, I'm just imagining somebody listening to us is thinking, hey, Peter, I understand. I mean, but 500, much as money is hard to come by, sounds very modest. After 5 years, how much would you have made out of 500?
Yeah, this is where the reward comes in for taking that risk. Yeah. Little by little, you put away, it grows in line with inflation, and the market rewards you for putting away that money in the form of dividends and interest. So the compounding of that escalates your investment to a considerable sum.
Let's talk about the equities now. You know, do you need to know anything about equities in order to participate in the market?
Not really. That's our job as financial advisors, is to assist you. We have the necessary skills to guide you through that and to inform you properly to make a correct decision.
But then most of the people, most of us, we think, you know, these things are for people who've got money, not for those of us who don't have money.
No, that's a misperception. That's for everyone. This is a savings. We need to get into the culture of saving, and that is our job, is to inform you. It's open for everyone.
But I mean, if you look at the profile in broader terms of the nation, how many people actually invest in the stock market, would you say?
Well,
percentage-wise, but just generally, in percentage terms, how many people do you think participate in the investments?
Optimistically, 20%.
See, 20%.
Yes.
So my question is, what is not wrong, but where are we missing the point? The rest of us, the 80% of us.
Misinformed. I think we should inform the nation more and more.
Yes.
Provide proper education out there. Inform people financially, because we are financially illiterate, and show people the risks and the profiles and the processes of how to do this. This will remove the uncertainty with most of the people out there who are not aware of the markets and so forth.
Well, but the modest returns on some of the investments have led to people participating in pyramid schemes, for instance, in recent times, that it becomes a real investment if you promise things like 30% return, for instance.
You see, they didn't do the risk profile, because it's nice to hear you're going to reward me with 30%.
Yeah.
But what's the 30% going to? I want to know, I need to go on a holiday in 2 years' time. How are we going to do this? How are you going to match that? The fancy word is liability. How much do I need to put away? And will the market reward me for putting away that money? That's where the financial advisor comes in and does the calculation for you to show you these estimates and to properly inform you. Listen, it takes time. This is what we're going to do. This is the strategy that matches up to your risk profile. So now you're educated. We show you everything. We show you the fees. We show you the possible returns that is linked to this. And now you can make an informed decision.
Is there any catch anywhere?
I would say I always tell my family members, red CI. Red, what is your risk profile? Make sure what it is. Is it conservative? Is it moderate? Can you afford it? We match that up, the advisor. The C, and we spell it with a CEE, is for costs. What is the cost involved? You get a fund cost, you get an advisor cost, and you get a platform cost. The platform cost is like an admin cost for dealing with your investments. And then finally, inflation. Be very aware of inflation, because that destroys your capital in the long term.
All right, let's recap now. The ABC of everything around investments. What do we need to know is, in broader terms, if we can recap where we started?
In broader terms, red CI. Do your risk profile. That'll match up with your investment strategy. Your investment strategy will most definitely incorporate the effects of inflation. In a nutshell.
Okay, and again, when is the right time to start?
Today.
Today?
Today.
You don't have to wait for the year-end bonus?
No, start today. Most definitely.
And that's it?
That's it.
Okay, Pieter, thank you very much for talking to us. Much appreciated. Well, there you are. Investments start today, says Pieter. Red CI, he says as well. Inflation, costs attached, and what's the rate?
Risks.
Risks, yes. And the amount of money does not have to be too much, right? You can
start today with a little amount.
Yes.
It will evolve, yes.
And that's how we help you make your money move right here on the program. And this interview is brought to you by 27-4 Investment Managers. Start today.